Hello, this is Richard Pears from Finextra TV, and I'm joined by Duncan Grierson from Clim8. Hello there, how are you?
I'm well, Richard. Great to chat with you again. It's been a few months since we last spoke.
I know it sort of feels pre-COVID. It must be about that time, and for everyone just to put the frame that I can't believe they won't have listened to this last time, but if they did, miss out. You're the CEO of Clim8. Clim8 is an organisation which is working on impact investing and so forth. Tell us a bit more quickly about who you are, what you do, and then we'll get into what's been happening since we last spoke.
Sure. Yeah. So Clim8 Invest. It's a digital platform, retail focused, to allow anybody to invest into companies that are either in clean energy or have as we describe, kind of a truly green product or service. So it's not ESG investing. It's something which is even deeper into sustainability, and I guess you could broadly call it impact investing.
Yeah. So last time we spoke, you were just going through a crowdfunding, and I think we spoke about that partly as awareness as well as obviously adding to the fund. How did that go? How did that work for you?
It went incredibly well, yeah, and it went super well, despite it being, I think we launched kind of peak COVID in the middle of April, and whilst a number of other people started to pull their funding, and we kind of went for it, and it went incredibly well. And I think that bears witness to the fact there's really a lot of interest in sustainable investing now, and I think that's actually accelerated through COVID. I think there's a lot more interest than there would have been a year ago in how we're investing our savings and our pension. I think people really want to have an impact now and know where their money is going. So yeah, so the crowdfunding went incredibly well. We raised 3 times as much as we'd gone out to raise, which is great. And actually, we're in the middle of another raise now. So things have gone well. We actually hired ahead of the curve. So we have hired in our plan, and we're in the process of doing another round as we speak, which is also going extremely well. Again, partly offline. We raised money from a venture capital fund, and they're investing again in this round. And we're doing another round on Crowdcube, which is going extremely well.
Amazing, amazing. So let's reflect on that a bit, because I suppose, as you say, right in the height of COVID, and there was a narrative going around that we're all going to focus in on the here and now and not worry about the future, meaning quite rightly ourselves rather than the planet. Also, people aren't going to be able to work and operate. Clearly, everybody knows that wasn't true. We can work in a distributed way, but hiring staff, motivating staff, all these things that you've been through. Give us your reflection on that journey.
It's gone surprisingly well. I think we all went home on 13th of March, and we've all been working from home ever since. As one or two people have been in and out of the office a few days here and there, but pretty much all from home. And it's gone really well. We've actually doubled the size of the team. We've gone from 9 people to 18 people in that 6-month period, and we've had some fantastic people. And I think working from home, certainly for our kind of business, is actually pretty productive. It's not perfect, but we can work very efficiently, and we're using different tools like Slack and Hangout and Zoom, like everybody else, which have their benefits and disbenefits. But it's actually worked really well for us so far, and we've doubled the size of the software team. We've got a big in-house team of engineers who built our product. So yeah, it's gone well.
Yeah.
And we've launched. So we've launched in private beta, and we've started onboarding people to invest into these great companies using our app.
Fantastic. So people are obviously worried about their money as well as the values. So clearly, these funds have, across the spectrum, been performing well. But you have a particular view. It's not just, well, ESG has done well because it wasn't in oil and gas and it was in tech, and you had a particular view. Remind us of how you invest, and how you guarantee how you tell people that you are delivering the impact that they're signing up for.
Yeah, we're I guess we're quite unusual. We're trying to be, if you like, pure play. So we're not just screening out oil and gas and coal and we're not ESG, so screening for ESG. We're actually even more, I guess, active than that. So we are putting companies on our portfolio that are either in clean energy or clean technology, smart mobility, and a couple of other sub themes. And each of those companies has a product or service that is having a impact on this massive problem that we all face, which is climate change. And that's quite different from ESG filtering, which is what I think the vast majority of sustainable or ethical type funds are doing, which is fine. That's already moving the dial. It's already having an impact. It's raising awareness. But for us, we want to have as big an impact as possible, and that's by putting people's money into, if you like, planet positive companies. And so that's more active. It's much more active investing than what a lot of other people are doing. And so far, so good. We just released some results. So our portfolio over the last 12 months would have had a 10.8% return, back tested, and that has been also very good in the last couple of months since we actively launched and onboarded investors. We've had, I think, a 4.5% return over a 3-month period. So again, very good returns, outperforming the market, the benchmarks. And so, yeah, so our hypothesis is that you can not only do well with your money, have an impact, a positive impact, but you can actually get a very good return and potentially a market outperforming return.
Yeah, fantastic. Which is, I think, a message we're hearing loud and clear, but really good when you're getting that, as you say, that planet positive approach. When you sort of think about what actually is going to come next in your journey, you spoke about obviously being on another raise at the moment. Tell us a bit more about what you're doing now, and where can we look forward to hearing about you in the next 6 months?
So the very short term, we're working our way through the waiting list. So we have a wait list of over 10,000 people now. So that's another thing that's kind of grown in the last 6 months since we last spoke. So I think 12,000 people now on our wait list. And we are going through them in batches, onboarding people every day, every week. And we will then be making some changes. So we're making some improvements to the product, and then we'll be in the app stores within a couple of months from now. And then hopefully we'll start to onboard, significant sums of money and people to make a difference. So that's kind of part one of the journey. We've launched with an ISA product, and we will be adding other similar types of products like a junior ISA and then a SIP, unsurprisingly, which is obviously a very similar product, but allows us to then potentially get on board people's money that's already perhaps sitting elsewhere and perhaps not getting the return they want and not getting the impact that they want with that money.
Yeah, absolutely. And it's been just a crazy time, but it has also been, if we put aside the inference from that, which is the life that we live, when you look at the world of sustainable finance, so much is happening, and seems to me a real hockey stick. But am I sort of stuck in the bubble of the conversations I'm having through Finextra, or how do you see this world from your lens?
Well, we probably inhabit a similar bubble, but I'm certainly seeing from what I read and hear elsewhere that there's been a real sea change, a real change in kind of the zeitgeist, and people are very much interested in having an impact with their money. ESG has become an absolutely massive thing that has been accelerated by COVID. And people are really thinking about what they can do with their money. And then there have been campaigns like Make My Money Matter, who are doing great work, making people aware that perhaps their pension is not sitting in the right investments, the right companies, and you should perhaps be having a conversation with your pension fund manager. And we're speaking exactly the same kind of language. Make sure your money is being invested in the right things, raising awareness, and hopefully moving the dial. So I think where the general trajectory is very good, but we have this massive problem again that we all face, and we need more of that. We need bottom up impact from us all as consumers and as investors, but we also need top down from the government and from perhaps the larger pension fund managers to be really moving significant chunks of money into the right areas.
Yeah, and what do you think, just finally, in terms of, kind of the two ends of the spectrum? I suppose there's kind of policy and regulation, taxonomies and all of that great sort of seemingly slow moving but very important stuff. And then you've got the kind of world of tech, where, in a sense you're playing, apps and satellites and data and all these things. If you look at both ends of the spectrum, what are your hopes and fears for either of those areas or both?
I think tech can play a big part of it. I think, the fact that we can build a product like we've built in less than a year, relatively fast. There's a cost attached to it, but that would have been much more expensive, even 5 or 6 years ago. So we and others can put products in the market and raise awareness and get money moving faster than you would have done at a much lower cost, even relatively recently. And then there's the whole piece around data. So you're touching on that with ESG. How do we improve the taxonomy, the definitions, where people's money is going? Right now, ESG it's a bit of an alphabet soup. Everyone has a different view of exactly what it means. There's quite a few people using it as if you like, a marketing tool. Other people are doing a better job, I think, on that. But all of it, or everything that underlies ESG is reporting from the companies, so the underlying companies. So there's always going to be, at least for a while, an element of trust. But then tech again can hopefully have a helping hand now, providing data feeds from different sources. For example, satellite feeds. What are these companies actually doing on the ground? What are their emissions on the ground, and can then be impacted by engagement by their shareholders saying, well, we can see that actually you're not doing X, you should be doing Y. So I think the general trajectory is very good. Data can help, technology can help. I think awareness building is definitely moving the needle, but we need to do more. And hopefully we can play our little part in all of that.
Absolutely. Well, interestingly, our next workshop with Sustainable Finance Live is on spatial finance. So it's all about that satellite data, bringing that back into the world of finance. So you hit on a resonant note for us. Tell us finally, where can people check in, invest, spend their time with you and the guys at Clim8?
So I guess a couple of ways in the very short term. So check out our website, clim8invest.com. Get on the waiting list. We'll try to onboard you as fast as we can. And then if you also would like to be an investor in the company itself, we're currently on Crowdcube right now. We're about halfway through our campaign, so there's a bit of time left, but we won't keep it open forever. So take a look at that and see if you would like to invest in the company itself.
Amazing, good stuff. Well, thanks for the update. Come back again. We love to hear what's going on. So all the best for now. Good luck.
Brilliant. Thank you, Richard. Take care.